Welcome back. It's Walter Peters here, and you're here at the Daily Trader. I just want to talk today about your niche and finding out what kind of trader you want to be. If you're looking at this chart, what do you think right now? Just take a moment to think about this chart right here and looking at where we are right now on the far right hand side of the chart. What do you think right now? Are you thinking that you would like to sell this pair, or would you like to buy it? Do you think this market is likely headed lower, or is it headed higher? What do you think about this right now? Just take a moment to write down on a piece of paper where you think this market is headed, and I'll give you a few moments for that. If you need more time, you can pause this video right now. But this is it's important that you do this because I'm going to show you how you can define yourself as a trader. A long time ago, when I first started trading Forex, I was told to define myself as a trader by a very, very smart individual who taught me how to trade. He said, you really need to make sure you know who you are as a trader. Now, there are many different ways to trade this chart. Looking at this chart right here, someone may draw like a trend line, something like this, and say, you know, I'd be interested in taking every kangaroo tail here off the trend line. There's one there, there's one there. That's not really a good one there. That may or may not be one, depending on how you trade them. And then there's even one up here. So if I'm sort of a person that wants to go with the flow and trade with the trend, this is clearly has been an uptrend with some pullbacks and kangaroo tails on the pullbacks. So seeing the market right here, I might think, oh yeah, it's time to buy. As long as the market clears above these highs here and closes above those highs, maybe I'll go long. If, however, you're looking at this thinking, well, it's been going up for some time now, it's probably about time that it turns around and falls. And you look at this and you say, look at this. It's touched here, it's touched there, and now it's touched it once again. If I get a bearish candle here, I'm looking to sell this. Either way can make money. In fact, both ways can make money, as we'll see right now. I'm going to hit the F12 key and I'm going to advance the chart one candlestick at a time. You can see here, I even get a bearish kangaroo tail here, so I might want to sell it at this stage and see what happens. It goes against me a little bit, goes against me a little bit more, and then now, there it goes. It's going lower and lower. And look at this. Where is the market going? It's going right where it went before, where these highs are right here, and these highs right here. And there you go, and that's where we get a little bounce right there. So I could have sold it off this kangaroo tail, and I could have taken profit all the way down here at these highs right there. It even went a little bit lower there. Now, it's coming back up. It's come back up to my zone here at 149.46. And now it looks like it's getting ready to explode through. Why do I say that? Because it's touched it, it's touched it, it's touched it. Boom. Now it's on the other side. And it looks like it's off to the races again. So in other words, both ways would have made money. Had I decided that I wanted to take a sell trade off of this support and resistance zone right here at 149.46 on the pound yen daily chart, I could have done that and I could have made money because I could have taken profit right down here off of these highs here and these highs right there. Essentially, that's this level right around there because the market did go down there. Now, if I instead decided I'm a trend follower, I like to go with the flow and go with the dominant trend, I could have waited for a close above this level, and that was right here on this candle, and guess what? The market's trading higher and higher and higher. Either way could have made money. It's up to you to define yourself as a trader. How are you going to trade? Are you going to trade reversals? Are you a counter trend trader? Or are you going to go with the flow and trade with the trend? Also, what about your trading day? Do you have a job that you have to go to, that takes up your day from 8 a.m. till 7 p.m. every day? If that's the case, and you want to be a lower time frame trader, then you need to set aside an amount of time every day, whether it's 3, 4, 5 hours in the morning before work or when you get home after work, where you can sit down and trade. If you're going to trade the lower time frame charts, and you have to actually sit there and watch it. If, however, as a person with a job, you decide, you know what, while I still have my job now, before I go pro as a trader, what I can do is I can trade the daily charts. Why? Because it only takes a little bit of management, maybe 5-10 minutes of management every day for me to trade those daily charts. So either way, I'm defining myself as a trader. I'm saying, look, I'm a lower time frame trader. I'm going to trade from 10 p.m. to 1 a.m. at night, right? After my work, right? Or I can say I'm a higher time frame trader. I've got more patience. I'm going to trade the daily charts. I'm going to check my charts, my daily charts, in the morning before I go to work and in the evening when I get home from work. And that's it. Either way is valid. It's just defining myself as a trader. How am I going to trade and what sorts of trading setups am I going to look for? I hope that you find this useful, and I can't wait for the next video at the Daily Trader. And until then, I wish you very happy trading.